Hi all, welcome to Bond Bytes, the daily bond market highlights from INRBonds. I'm Arjun Patsarthi, and when risk aversion is rising, US Treasury yields are higher, the dollar is looking up, and equities are moving all over the place with some shifting of money from one sector to another. The 10-year GSEC yield is also higher on worries of inflation. And in all this, Indian banks are rushing abroad to raise capital through issue of additional tier one bonds or Basel III compliant bonds, as you may wish to call it. These are also perpetual bonds. And given that SEBI has come out with strictures on banks not offering perpetual bonds to retail investors and making the face where making minimum investment at rupees 1 crore, the banks are now going abroad to raise this capital as their current issuances of AT1 bonds start to mature in the coming years. We could see Axis Bank is HDFC Bank went first to raise money and they raised $1 billion. Axis Bank is the next to raise $1 billion through issue of additional tier one bonds. And this bond has an additional feature of being ESG compliant. And a lot of global investors are looking for green bonds or ESG compliant bonds given their mandates on ESG. So ESG is becoming more and more important for investors both in India and globally as climate change and many other factors are becoming more relevant to investors and how fund managers also see where they deploy the money into the right asset classes that are ESG compliant, which is a good sign. And we can see this trend of more banks going abroad to raise foreign capital, given that there is a huge amount of liquidity. The US Federal Reserve is going to keep interest rates at all-time lows and keep pumping in money with increasing number of COVID cases globally. And this is going to increase the demand for assets across higher yielding assets. And this will be taken advantage of by banks. But however, there is a caveat, and the risk is also high given that if the dollar value increases and emerging market currencies fall, then the cost of raising these funds become higher due to fall in currencies. And even now, if the banks hedge their current costs so that they don't have to face currency depreciation, then the cost is not very significantly high. But the fact is they do get liquidity and funds from foreign markets, while Indian markets may not be as conversant with AT1 bonds as foreign markets and investors are. Don't forget to subscribe to our YouTube channel and also to register for our webinar on generating monthly income cash flows, which is very important for a lot of investors who require monthly cash flows to meet expenses. And I'll be discussing with a few panelists on the best way to construct monthly income portfolios. And this webinar is scheduled for the 4th of September. It's a Saturday at 11 a.m. The cost is 200 plus GST, and all whoever's registering for the webinar gets free access to INRBonds Quick Invest, the retail electronic bond platform where individual investors can invest in bonds in the right bonds, the right price, and in the easiest and most transparent manner possible in the current marketplace. Thank you for listening in, and don't forget to register for the webinar. The link for the registration is given in the description below. Signing off, Arjun.